So here we'll have the final installment of the trilogy, our third video, looking at intraday on Thursday, August 20th. And we have the 8-minute chart on the left, the 4-minute in the middle, and the 15 over on the right. So what we were looking at before was when we saw it make new highs here, take out the morning high, and go a little bit above the value which has developed on today's trading. We saw that small breakout was confirmed on increasing volume and positive delta. When we went over to the 4-minute, we saw a possibility of taking a short trade here. As you can see, it didn't do much, and that's why if you take a trade off the 4-minute, you can't really count on a very significant move if the 8-minute and the 15-minute are not really giving you indications of increasing volume on the sell side. Now, this is quite typical of this pattern when you have a new high made on positive delta and increasing volume on the 15-minute time frame, and then the following bar gives you the negative delta but decreasing volume. That's just going to be a pullback rather than a major turn in all likelihood. Now, you can possibly sell those, but you really have to look at them as scalps. And if you go over, then you need to go to a smaller time frame if you want to optimize your entry to be able to make anything on the trade. But even on a 4-minute, you didn't have much there. I certainly didn't participate in that. Now we talked about if you have a retest. If this would have retested on the 8-minute and you would have had this negative delta, then that would have been a reasonable trade to take. But as you can see on the 8-minute, it was an outside reversal bar to the downside. You certainly wouldn't want to sell down here on the close of that bar when you had this signal confirmed, because you're too far off the high. It's not a high probability trade at all. However, if you want to trade off a 4-minute, so we're looking at half the value of that 8-minute, and if you look at this 4-minute bar here on the middle chart, you can see there were two bars retracing up, very, very small range of course, but they were retracing up, and then down here you have negative delta, barely, and increasing volume. So sellers were taking over at least on that 4-minute time frame, and that was enough to get you a point or maybe even 5 ticks, and that's about it. But nevertheless, that is the pattern, but it's on the smallest time frame. The ideal patterns are going to set up so that you can even see them on a 15-minute time frame over here on the far right, and that's not what we had here. Let's just take a look at the 15-minute. So on the 15-minute, you had increasing volume on the new high in the morning. You had very strong delta. Your little inside bar was negative delta. You did have this short sell-off, but notice as it was going down, volume was diminishing, and delta was also the negative delta was diminishing. So it was basically balanced out. Now on this low bar, you did have a little selling. So that's telling us that on this retracement here, this is one we might look to sell. So selling did come in, but it was at the low, and it may be that was covering, a lot of short covering, going into that volume. So this isn't really enough yet to make us want to get aggressive selling, but it is a possibility. Now, we take our levels into consideration, and we have the value area high for the day here at the 1004 level. So we're 4 ticks under that right now. They made it up here to the 100350 area, and for the past 4, 8, 12, 16, almost 20 minutes, they've held under the value for this period from 10:30 till the present at 11:18 or so. So 45 minutes, we haven't been able to get above the value for this 45-minute period. So that's how we combine our levels and our volume. But again, on today, a typical very slow day, middle of August, we're not getting big enough swings to want to jump on these little scalping trades even at this time of the day. That's why I'm doing this video again. But it still is very revealing. And you know, if a person is just starving for trades, you know that right here, if you could sell it right up at 1,003 or 1,325, you might be able to get a couple ticks. You know, you can trade that tight. You know, you could take risk 4 ticks to make 2. That's about it. But nevertheless, that's basically what you have right now. You don't have any indication of the will in the market right now to push up to new highs, obviously, at least not for the past 45 minutes. So if you could sell at the upper value of the past 45 minutes, that's what you have available. Obviously, the better trade if you want to be a seller is to sell up at the value for the day, but right now you're not getting it. So that's why if we see a trade develop here over on the 15-minute at some point in the you know, the next, let's say 15, 30, or 45 minutes, if you were back up here and then you had a negative delta on a 15-minute bar, that would be a very strong signal, and it would be up at this value for the day. So that would be an example of a trade that, you know, you count on making a little more profit, so your risk reward would be more worthwhile. Also, if we look over here at the 15 minutes, similar situation. Actually, you had all this kind of retest of the high activity was not on very positive delta. This bar was, and it was increasing volume, but the following 2 bars didn't go down. So you can call that a retest, and that's why you might want to scalp off this upper value of the past 45 minutes. But if you were able to get in, let's say at 1,003, you know, right now you're only up 2 ticks and it hasn't gone anywhere, and that's tough to hold into the trade. You don't really have enough to excite you about the trade. But if right now, you know, past 10, 15 minutes, you're bearish, and that's the kind of precision you get from this volume analysis in the context of the levels. It's to the tick, and it's very precise, and it gives you a lot of confidence. If the market were moving more quickly and you did sell there, you know, on a good day, you might be up 4 or 6 ticks, so you can take those, and they're worthwhile. And again, that's why I'm doing the video today, because you know, I'm not anxious to trade in this kind of activity, and if most active traders are smart enough, if they've been trading a while, that they don't want to be active, regardless of their tendencies to be active at in this kind of a market pattern. It's better to step aside. So nevertheless, we have seen some very educational patterns on this very narrow range, small time frame, but you still know what you're looking for when it comes around the lunch period. Let's say it does sell off a couple of points, it's sitting here at support, then we'll do the same process to evaluate if buyers are coming in on the support here after the lunch. If it is up here at the highs when they come back from lunch, and you get a false breakout and then you get a delta reversal, you can recognize that as a pattern to sell. So we always have the patterns that we know how to look for. And just to refresh, the 2 big ones are, you have the turns that are made on delta reversals at the high bar, and then you have the retest. And this is all you had today. It was on a 4-minute, and it didn't give you much, but it was the second pattern where you had the retest of the high on diminishing volume, and then delta reversal on the retest bar. So at value, by the way, you're only 1 tick under the value area which has developed on the day. So that was a trade that didn't give much, but it was the pattern, and the pattern was predictive, as it usually is. So If we can get it across the board, a little more activity, hopefully in the next couple weeks we'll have that too. Hopefully this education will prove valuable.